how to invest in high yielding dividend stocks in Nigeria. So in this video, I'm going to show you the strategy to find the best stocks for dividends. So this strategy reviews the hot sector to buy dividend stocks for passive income and capital appreciation. One of the things I've noticed, even sometimes when I go online randomly to watch YouTube videos on how to pick dividend stocks and all that, I find out that people have been doing it wrongly. People have been doing it wrongly. Like they just tell you to buy any random dividend stock because the company pays dividend. But they don't talk about how to protect your capital. They don't talk about how to enjoy capital appreciation while also seeking dividend. So they are different things entirely. I can buy a stock for dividend and the stock price will crash. At the end of the day, I will collect my dividend. It's still dividend. But then what if the stock price goes down significantly? So can the dividend help me? Will I be able to collect dividend that will cushion the risk that comes with volatility? So this video will attempt to answer both questions on how to find good dividend stock, number one, and how to find dividend growth stock. So if you're looking for high yielding dividend stock, then you should look for dividend growth stock. Why? Because dividend growth stock would help you eat your cake and have it. What do I mean by that? It will actually help you find good dividend stock. Now, when you collect dividends, another thing is also sitting on your portfolio. That is capital appreciation. So, and that's the best type of dividend stocks to buy. So that's why I target how to invest in high yielding dividend stock. This strategy reviews the hot sector to buy dividend stocks for passive income and capital appreciation. So take your time, remove every distractions because I'm going to teach you what it means to invest in dividend stocks. I'm going to open your eyes to strategy to invest in dividend stock. So this is a video you would not want to miss as an investor in the market. This is a video that would help you reposition your portfolio. This is a video that will show you the strategy that I've been using to milk good dividend stocks in the market and also enjoy capital appreciation. So let me share this story with you. Last year, August, that was 2023. So this is a recap of my webinar in August. Now, last year, August, I hosted a webinar. It was a free webinar, and I call it Cash Out from Nigerian Stocks. Yes, Cash Out from Nigerian Stocks. And a lot of people joined because it was a free webinar at that period, both members and non-members. Why? Because I wanted to teach them something. I wanted to show them a strategy that is very profitable in the market. So, and that webinar is actually time bound, meaning the best time to hold our webinar is in August, specifically August, September. But I chose August because I wanted us to enter early. I wanted us to pick the stocks that I'm going to recommend at a lower price. That's why I hosted it in August, because I was contemplating on whether to host it in August or September. So, but I chose August because I want early entry on the stocks, because within that point, some stocks might even dip, and that gives you ample opportunity to buy into that stocks. And there were strategies I shared there. This year's own will most likely be for um my private community. So I'm not going to host it. It's not going to be open again. It has to be for members only, because I think that value was supposed to be for members, exclusive for members. But then I had to make it open because I wanted as much people to take advantage of that opportunity. So Cash Out from Nigerian Stocks 2024 is going to be for Glofolio community. So if you're a member of Glofolio, you're automatically going to get access to it. And if you're here to join, kindly go to glofolio.com. I'll show you how to join our community and then subscribe so that when it's time for us to host Cash Out from Nigerian Stocks 2024, you'll see the type of stocks that I'm recommending for both capital appreciation and dividend. Now, in August, I recommended Mansart, GTCO, Custodian. As of now, these stocks have appreciated and are currently disbursing billions of naira to shareholders. Now, if you had bought each of these stocks in August 2023, so if I go down and I check right here, I search Mansard in August 2023, Mansard in August 2023. So this is August. August is within this region here. Mansard was selling for 3.9. So meaning that if you had bought Mansard stock in August at 3 naira, now see what happened here. Mansard stock as at today is selling for 5 naira, and it went as high as touching 6 naira. That is almost 100%. This is a dividend stock. This is a dividend stock. Now, with Mansard pay dividend? Yes. You can go on to check how much Mansard had paid as dividend. So you can go. So let me see if I can find um any Mansard dividend history. Let me just Nigeria. Mansard dividend. Okay, this is it here. Dividend per share. Can you see here? 0.36. You can see. I don't know if this is correct. This for 2023, 8% yield right now. Yes, I think this is correct. So 0.36, that's 36 kobo. 36 kobo divided by 36. So let's look at the price then. That was around Masa was around in August, it was 3.86. So if you do 0.36 divided by 3.86. That's almost 9 point. I think as at then, Master dividend was almost above 10%, because if you go down, it dipped almost 3.5 in between that period. 3.5 because after that webinar, Master dipped a little bit. So dividend was around 10% around that period. Now, look at this stock. We bought at 3.6 here. That's Mansard. We bought at 3.56 on average. I bought at 3.56 on average. Yes, that's the price. And I collected what? 36 kobo. Now, one, capital appreciation was almost 100%. Dividend yield was almost 10%. That is a dividend stock. That is what dividend stock should do for you. It doesn't make sense that you bought a dividend stock just because you want to collect a patry 10%, 9%. And by the time you sell your stock or look at the value of your portfolio, you are already down by a sizable number. Now, it doesn't mean dividend stock is not good. If you've watched my video, if you've been part of my community, I've talked about the advantage of compounding your return and how that compound return can help you to grow your wealth over time, irrespective of price appreciation. So we'll talk about that. So that is the power of picking a dividend growth stock. I'm just trying to let you know that you can actually make money from capital appreciation on dividend stock. So it's not just limited to buying the stock and then waiting for dividend after a year. Now, what happens if the share price dip? Did you try to look at the possibility of price going down while you're holding that stock for dividend? So if you look at that, you see that you can actually move a little bit higher from dividend stock to owning a dividend growth stock. We'll talk about that. Now, GTCO, the same thing too. If you look at the price of GTCO from that period, when I recommended GTCO, that was the same August too. If you look at GTCO in August, on August, it was around here, around 35. You can see 35. GTCO rally higher. Can you see here to touch 40, pullback, then move to reach 52. Now we're seeing a dip down again. See, there's going to be good dividend stocks coming on board. You're going to find a lot of dividend stock in double-digit range very, very soon. I bet you. I bet you, because a lot of stocks are crashing right now. So, and when stocks are going down, that's the best time to find dividend stock. Now, we also talked about, I think I talked about custodian, then custodian. So, custodian in August was selling for around 7 naira. This is it here, 7 naira, and custodian had moved. Right now, it's selling for 8 naira. and then it touched the high of 10 naira. That is also dividend growth stock. So when you are buying dividend, try to check the possibility of price going up and down. It matters a lot so that you don't lose a significant portion of your portfolio to market volatility. Yes, one thing I talked about when I teach dividend stock is how to ignore price. If you're looking to hold that stock for a long time, that means if your plan is to stay in that company for a long time, you really don't have to bother about price because price will always fluctuate. Only traders are interested in price. If you are bought that stock for dividends, as long as the metrics that would continually keep you there, that would show metrics that helps you check whether a company is okay or not, are still telling you that the share price, sorry, the company is still strong enough to continue to pay dividends in years to come, then there's no need for you to worry and all that. But you make more money when you employ the model I'm about to share with you right here. Why? Because I'm looking at a situation where you can eat your cake and have it, meaning you can eat the dividends and still enjoy capital appreciation in the market. So that's a recap of our webinar in 2023. If you didn't join our webinar, please make sure you join the next one. Cash out from Nigerian Stock 2024 is coming very soon in August, where I will show you stocks you can quickly key in earlier against year-end results. And these are stocks that has the potential of paying you both dividends and also rewarding you with capital appreciation. So if this is the first time you're watching my YouTube videos, kindly hit the subscription button, turn on the notification bell so that when I announce this webinar, you would also be one of those that would get notified earlier. That's why you need to subscribe to my community or subscribe to my channel, or you can even do both so that you can at least get notification in both ways. Here is a disclaimer from me. Now, information I share here are for educational purposes only. They are based on my personal opinion and personal research. Please kindly do your due diligence before taking trade or investment decision. It is very, very important. So let's move into this particular course properly. Now, what are dividend stocks? The whole idea is to teach you how to invest in high yielding dividend stock. That's the idea. Rather than coming on board, just like what I've seen, people are just telling you, go and buy bank A, go and buy company A, go and buy company B, and all that. So now they will tell you, fine, it's perfect. Now, what if that stock is no longer strong as a dividend stock? So what if the stock they had selected didn't pass the checklist at that moment? Because stock trading is time bound. A stock might be a good buy today and not a good buy tomorrow. It might be a good buy in May, but by May next year, it may not be a good buy. So what I try to do in my video is to educate you, is to teach you, is to help you get the knowledge. Do you understand? So that when you are looking for dividend stock, you're not just coming to YouTube to now look for recommendations. You're coming to YouTube to get guidance. You're coming to YouTube to get the strategy, to learn how to fish, so that when you go back on your own, you are able to screen, even if you pick one or two recommendations or from your broker or financial advisor or from friend or from anybody, you can subject that recommendation to your own test. You understand? And be sure that this company is also a good buy. That's the due diligence I always advise you to carry out. So dividend stocks, from my own definition, to make it simple, are stocks that pays dividends, that pays you a part of their annual profit for being a shareholder. One of the reward of a shareholder is dividend. So these are companies that at the end of the year, once they declare profits, what happened? They will reward the shareholders for bringing their capital into that business. So that is what dividend stocks are. They have a history. They have a history of rewarding their owners and those that have equity in them. If you have a stake in a company like FCMB, or you have a stake in a company like NACO, at the end of the year, when they declare dividends, what happened? They'll pay you, and then for being a part owner of that company. So these are dividend stocks. Now, every year you keep hearing dividend, 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 dividend. dividend. And I can tell you categorically again that dividend stocks have helped people to become rich in the market. There are people that are only in the market for dividends, and what they do is they accumulate and reinvest. Dividend is one of the best ways to build wealth. It's one of the best way to build wealth because it's one investment you can just make one time and continue to enjoy cash flow for life. So that's why when people are talking about how to build wealth, when they mention real estate, they also mention dividend stock. Why? Because if you're able to buy into a good company, you will continue to enjoy cash flow for the rest of your life. But how to do it and do it well is what I'm about to teach you right here in this video. So I'll just share this my own simple definition of dividend. There's no need to start using complex language. For being a part owner of the company, you are also going to be entitled to share of the company's profit at the end of the year. While I'm doing this video, when I'm recording this video, some of us have been receiving dividend from different companies that we bought their shares last year. So that's dividend stock. Now, is it right? Must everybody invest in dividend stock? Must everybody invest in dividend stock? Or should I just focus on capital appreciation? Well, it's good to invest in dividend stock because here I'm going to tell you why you should invest and trade dividend stock. Now, that's where we are now going to talk about how I am doing it, what you should do. And why should you trade dividend stock? You can actually trade dividend stock. Now, apart from trading normal stock for capital appreciation, I've always said before that trading and investing are not the same. So whenever I mention trade and I mention investing, you should know that they are not the same. But here I'm specifying this title and I'm saying why you should invest, why you should trade dividend stock. Now, they are loved by institutional investors. They are loved by institutional investors. They attract volume. In short, this volume, I need to make it big volume, or in short, the biggest volume. They attract the biggest volume and can appreciate significantly if you key in earlier. Do you see the advantage? You can trade dividend stock. Dividend stocks are not just for investing. You can also trade dividend stock. When you are investing in a stock, you said your intention basically is to buy that stock and hold for a long time, maybe like 5 to 10, 6 years. But when you want to trade dividend stock, the plan is I want to buy this stock for both dividends and capital appreciation, meaning that my intention is to sell them. Trading basically is for short term, right? But then you want to sell them in such a way that you will not only collect dividend, number one, you would also be able to collect profit from capital appreciation. So why should you trade them? And look at it. One of the best reasons is that they are loved by institutional investors. There is nothing like following the money. And these guys are actually the money. If you're looking for the money in the market, follow the big players. Who are institutional investors? Institutional investors are the insurance funds, the insurance companies, the mutual fund, the investment managers, stock brokers, private equity firms, pension fund managers. These are institutional investors. This is the institutional money. These are people that when they go into the market, their 1% alone is heavy. When pension fund managers are buying a particular company stock, even if it's just 0.005% or 0.0% or 0.01% of whatever they have, I can tell you there is going to be volume. In short, it will be obvious on that stock that something is happening because you will see a huge spike. The stock will start going on full beat to back to back. Why? Because someone is mopping up that stock. Now, some of them, what they do is they don't dump their money at the same time. They go in batch. Maybe if they want to buy 500 million unit of a stock, what they do is they might dump 10 today, 20 tomorrow, 15. Do you understand? That's how they keep requesting. They keep bidding until, and the same way if they want to sell, that's how they'll sell in tranches. You see the stock crash. But then if they want to buy, that's how they see the stock rally higher. So if you want to make real money, follow the money. And how do you follow the money? Know what these guys are doing in the market. And these guys, they love dividend stock because you can't afford to invest almost 100 million, 1 billion in a stock without the volume, number one. Number two, without looking for dividends. So that's why dividend stocks attract institutional investors in the market. So these guys attract volume in the market, that's dividend stocks, and can appreciate significantly naturally. When a stock attracts volume, what happened? It definitely appreciates. It would affect the price. No? You can't hide it. You can't hide it. So if you follow the market, look at the stocks I recommended. Mansard is a high volume stock. GTB is a high volume stock. Custodian is also a high volume stock. So because these guys are actually attracting institutional investors, they attract big volume. It's natural for you to see their share price go up. Now, it doesn't mean that other stocks are not high volume stock, but I am looking at stocks that if you check their average volume on a weekly basis, on a monthly basis, quarterly basis, or annual basis, you would know within yourself that this is a high volume stock. There are times when you hear that was the most traded stocks in the market. DTP was the most traded stock in the market. Mansard, most traded stock in the market. Zenith Bank, most traded stock in the market. These are high volume stock. And that is where the money is. And one advantage of this kind of stock is that you can go in and out and it's as if nothing happened. So if you're looking for a stock, you can buy like 10, 15 million units at the same time and leave anytime you want. These are the high volume stock you should be paying attention to. So that's one thing I like about dividend stock. They are mostly high volume stock. Now, it's a way to earn passive income, which can help cushion the effects of market dips and volatility. That's also good. For someone who is scared of market volatility, oh, my share price can go down. What if it goes down? What if it crash? What if I lose money? One of the best way to cushion the effect of market dips or volatility is to buy dividend stock. Now, when you buy dividend stock and you reinvest the dividend you have received into the company stock, you are acquiring the company shares at zero cost. And by doing that, your average cost on that stock is reducing. So if you buy a stock for 5 naira and you buy like 10,000 units, right? So it means you paid 50,000 naira to buy that stock. Now, if at the end of the day, the company pays dividend of 10%, which is 50 kobo. Now, 50 kobo of um 50 kobo of 10,000 units. So if you do 10,000 units times 0.50 kobo here, yes, that's 10,000. You can see here, that's almost 5,000. So I don't know if I'm right. 10%, 0.10% times 5 naira. Yes, that's 50 kobo per share. So 50 kobo per share multiplied by how many units do you have? 10,000 units. You can see here, on average, I'm just assuming this is 5,000. Can you see here? So if you add 5,000 back to this 10,000, so that means you have an average of 15,000. So if you now divide that 50,000 divided by 15,000, you can see your average price has dipped from 5 naira to 3 naira. Did you see? You bought at 5 naira because you receive additional shares at zero cost. So the advantage of reinvesting your dividend is that your average cost per share keeps reducing. So it helps you cushion the effect of, so even if the stock price has reduced, because you are buying the share at zero cost, your average cost is also reducing. So that's another way. Now imagine that you are acquiring the share year on year. You get to a point where by the time you look at the value of a portfolio, it has appreciated over time. So one of the ways to enjoy long-term capital appreciation without risk is to continually reinvest your dividend for a long time. That way to cushion the effect of market volatility, and it will also give you long-term capital appreciation. I've demonstrated this on all my video courses. You will get to see it. So that's why you should trade dividend stock. So don't ignore dividend stock in the market. Don't look at them and say, oh, this dividend, this company that pays zero kobo. Don't look at dividends from whether it's 1 naira, 2 naira. Look at dividend from the point of yield. Look at dividend from the point of yield. A company might be paying 50 kobo dividends. It might be far better than another company that is paying 2 naira. It's not really about the naira figure, whether it's 1 naira or 2 naira. Look at it from the point of need. That company that is paying 50 kobo might be 10%, while the one that is paying 2 naira might be 2%. So you might think 2 naira is higher than 50 kobo. Let me quickly buy this. You would most likely not make more money. So it's better you look at dividend from the point of yield. What is yield? Yield is dividend per share divided by the price, which is like the percentage return on your dividends. So this is the reason why you should invest in dividend or trade dividend, I mean. Now, criteria to pick dividend stocks and lower your risk. When you go to the market, don't just random pick dividend stock and assume that because they paid dividend last year, then automatically it's a dividend stock. Not every stock are actually, not every dividend stocks are aristocrats. There are stocks, we call them dividend aristocrats. These are companies that have record of consistent dividend. So here, I always look for juicy yield in the market, juicy yield of at least 10%. Any company that cannot pay me 10%, if I want to be a little bit fair, can drop this to an average of 8 to 10% to be fair. 8 to 10% to be fair, with solid cash position. Now, when I'm looking at cash position, a lot of things make up that cash position. It's not just about cash. A lot of things make up uh, for this cash position. The starting point of a cash position is revenue. So in this cash position, which I've marked green, you're looking at the revenue of that company, you are looking at the debt position of that company, you're looking at the liquidity of that company, you're looking at the whether the company is conservative, whether it's exposed to debt or not. You're looking at a lot of things before you can say this company has solid cash position. Solid cash position. It is very important, or solid fundamentals, and then has a track record, of consistent dividend payment. So meaning once you do all your checklist, you want to see that this company has been paying dividend for a long time. Dividend aristocrats are companies that have been paying dividend for at least 10 years. At least 10 years in the market. These are dividend stock. Consistency is key for at least 10 years in the market. If it gets to 15 years, 20 years, then this is a no-brainer. So here you're looking for stocks with at least 8 to 10% yield. Remember, this 8 to 10% yield here makes it a high yielding dividend stock, but then you can leverage on compound return to grow that money. Now, it's not just about dividend alone. Like I said before, we are also looking for capital appreciation in the market. So I'll talk about two things. First one is dividend stock, which is okay. Every year you're collecting your dividends and then you're investing, which is fine. And it's okay for cash flow, no stress, no work. The other one is dividend and capital appreciation, meaning you collect dividends and also enjoy capital appreciation, meaning that means you are going to sell the stock for both dividend and capital appreciation and then look for another company that is rinse and repeat every year on year. So here you're looking for a company with juicy yield of around 8 to 10%. But first, I will start with 10%. It's only when I don't find any stock around 10% that I can drop to 8%. But anything below 8% is a no for me. With solid cash position, and I've mentioned what makes up this cash position. It's not just about how much they have in the bank, but the origin of cash position basically is revenue, number one. Number two, we're looking at the company's debt position, profitability. A lot of things are going to be factored into it when you want to check whether a company is good for dividend or not. And importantly, most importantly, track record. You don't want to buy into a stock that is paying dividend today and next year it will miss, second year it will pay, and then you're not seeing some level of consistency in the market. Here, I'm going to introduce you to one of my best video courses on coachoge.com. Here, you're going to learn about dividend stock. I call it beginner to dividend strategy to earn passive income year on year before you retire. So this particular video course, which you see right here, is designed for dividend. If you want to learn how to pick dividend stock from start, like as a beginner, you don't know anything about dividend stock and you want to start from scratch, this course is for you. Now, this is not the regular dividend investing tutorial It's an unconventional secret that billionaire investors have used to become more prosperous every year in the market. This video course is for those that can't swallow the risk of trading stocks or waiting for the price to appreciate before they make money. Imagine that every year for the rest of your life, your favorite company is paying you a guaranteed 16%, 20%, 22%, or even 25% return on your money credited directly to your bank account without stress of trading stock. That is the point. So here you're looking at how to be able to grow your wealth. Look for stocks that can give you this kind of big return. Do you understand? So even if share prices are falling like a rock, this strategy has generated double-digit return of up to 50% above market index. I use the data of three stocks to demonstrate this. So here is a practical video. You will see the three stocks I've picked. I picked the dividends. I did a lot of simulation, and then I looked at the share price appreciation over time and how that the share price of this stock had dipped. But despite the significant dip, people that have bought into this stock based on dividends would have enjoyed long-term capital appreciation. So that is the power of investing in dividends. So here, the perfect six checklist to pick juicy dividend stocks in the market. You can also use this for US stocks too that will beat inflation and pay more than treasury bills. So here, there are six checklists I mentioned. With this six checklists, you would continually pick dividend stock back to back. So that is what beginner to dividend stock course will do for you. So if you want to get this course, you can go to www.coachuge.com, then click on course. So you will find beginner to dividend stock right here. So that is what this particular course will do for you. So that's where this cash position is coming in from. Like, you don't have to do all the fundamental analysis. There are just six checklists that I carry out. Once these six checklists tells me that these stocks are okay, then there is no need for me to worry again. I go into that stock big. So that is what dividend to income, beginner to dividend course will do for you. Now, let's move to the next part. How to eat your dividends and enjoy capital appreciation. Things like how to eat your cake and have it. Can I buy a stock for dividends and also enjoy capital appreciation? This is a dream of every investor. In short, another way I can call it this is how to buy a dividend growth stock. That means it passes the checklist of a dividend stock and also passes the checklist of a growth stock. Dividend stocks pay you dividend, right? Growth stocks rewards you via capital appreciation. Now, imagine a stock meeting both criteria for dividend stock and also growth stock. We call it dividend growth stock, meaning when you buy them, you don't buy them just for dividend, you buy them for capital appreciation. When I hosted this webinar in 2023, these were example of dividend growth stock as at then. These were dividend growth stock as at then. Remember, note, I am not recommending this stock right now. I am not recommending this stock right now. This stock the price had moved. As at August, these were perfect example of dividend growth stock, meaning you buy them to collect dividend and also enjoy capital appreciation. Now, the question is, how can I eat my dividend and enjoy capital appreciation? How do you eat your cake and have it in the market? Some people say you can't eat your cake and have it in the market. How do you expect to buy dividend and then later on you want to enjoy capital appreciation? What happens when the stock is marked down because of dividend? I will share all that with you. You will see the strategy I'm using. Very important. I just shared an example of a stock that delivered both dividend and capital appreciation in the market. So meaning it's very possible. Now, this is a model that lets you buy dividend stocks, which also doubles. Do you understand? It lets you buy dividend stock that doubles as growth stock for capital appreciation. So that you can take advantage of market rush. Now, who is going to drive this market rush? That's my question. You should know that. Institutional investors. So you can take advantage of market rush. This market rush you're seeing here is key. If there is no market rush on that company stock, you may not enjoy capital appreciation. So you want to buy a stock that pays dividend and also doubles as what? The growth stock for capital appreciation so that you can take advantage of market rush to make money from dividend, still collect to make money from capital acquisition and still collect dividends. This type of stock benefit from sector trends. I just shared one secret right now. In my community, I host webinars, monthly webinars with them, and we'll be having our monthly webinar next Sunday for May. Now, every month, one thing I don't fail to tell them is the hottest sector. I tell them the hottest sector, the hottest sector. Why? Because by telling them the hottest sector, I want to reposition them to where the money is. I want to reposition their mind to where the money is. Where you must continually find the money, look for the money. That's where the money is. Look for the money and get the money. If you are going to make money in the stock market, you need to learn how to look for the money, because that's the only way to make money. And how do you look for the money? You look for the hottest sector. There was time consumer goods sector was hot. There were times insurance sector was hot. There were times oil and gas sector was hot. There were times industrial goods sector was hot. There were times finance, banking sector, finance sector. So you must continually look for the money. And one thing is, in every economy, there will always be one sector that is benefiting. That's the hottest sector. That is where you can find dividend growth stock. Dividend growth stock, you can't find them randomly. If you want to find the hottest dividend growth stock, meaning stocks that will pay you dividend and also deliver capital appreciation, it would most likely come from the hottest sector. When I hosted this webinar last year, guess what each of these stocks had in common? Guess. They were in finance sector. And what was driving finance sector last year? Exchange rates. These guys were benefiting from exchange rates back to back. If you look at Mansard results, exchange rates added billions of naira. Look at GTB, billions of naira. Look at Custodia, billions of naira. So when I saw that, I found out that these guys were going to declare not just more profits, higher profits, but because of the fact that they are in hotel sector, they are going to enjoy significant capital appreciation. So when you want to eat your cake and have it in the markets, look for dividend stocks that are in the hottest sector. So the fact that they are good dividend stock alone already makes them good as dividend stock. Now, the capital appreciation will be guaranteed if they are in the hottest sector in the markets. If they are in the hottest sector. Now, knowing what stock to buy in that hottest sector is a different ballgame entirely. So don't jump into any sector and say, oh, if this is the hottest sector, meaning any stock. No, it's not every stock that is in that hottest sector that is a big stock to buy. So these are the things I do. I share with my community. I tell them the hottest sector to buy. Fine. Then when I'm doing my research, I spend, the advantage of knowing the hottest sector is that it helps me to concentrate. Instead of dispersing my energy, sort of spreading energy across different sectors. It will help me program myself. It will help me focus. And there's nothing like focus. So energy that we use to start analyzing banking stocks, consumer goods stock, insurance stock, I spend them all on just that hottest sector. And most likely, I will find the best stock in the market. So if you want to profit from dividend stock and still collect your dividend, then you have to find dividend stocks that are in the hottest sector, dividend stocks that are based on hot sector trends. That is how to eat your dividend and have it. Now, this model can actually help you multiply your wealth by rotating dividend stock. So here's the model. Here's the model. This is an exercise that requires you to switch from one dividend stock to another. So you will see that this type of model does not require you to stay on one stock for a long time. So what I do is I look for dividend growth stock every year, every year. And once I find them, I will then push them to my portfolio. I will then hold them for at least 1 year. So meaning when I buy them in that August, where I host my cash out from Nigerian stock webinar, I will hold them till the following year, which is December, January into February and March. Now, that is where I'm expected to qualify for dividend while also enjoying capital appreciation. So if I hold them between August, September, October, November, December, January, February, March into April, that's almost 9 to 10 months. So within that 10 months, I'm expecting that stock to appreciate because they are in the hottest sector, because there's been proof that this company is benefiting from that hottest sector. And then price will most likely appreciate while also collecting my dividend. So the idea is this is an annual exercise that requires you to switch from one dividend stock to another hot dividend stock. Another hot dividend stock, especially companies that would record share price appreciation based on sector and yield. So the yield is telling you, this guy is giving us 10% return. Perfect. Now, the sector is telling us this guy we appreciate. You know what? 90% of the share price appreciation you notice on a stock, they are driven by both the sector and the market. It's not a company. So don't always assume that a company share price will move because it's the company. 90% of the share price appreciation of a stock is driven by the sector that that company is and also the overall market. So you must pay attention to events in that sector. It matters a lot. When government removes subsidy, why did oil stocks rally when they have not released financials? Because of sectoral events, because of sector announcements, sector policy. So sector events can push stock price. Sector events can make a stock spike, can make a stock spike. I have a video called explosive stock, how to pick stocks that would spike. You see, most of the stocks that I shared in my previous video on my explosive stock, they are already there. How to know stocks that is about to move. That's what I shared on that explosive stock video. Let me see if I can find that on my course platform right here. This is it here. How to uncover high flying stock. Here, I mentioned 5 key things that will make a stock to spike. 5 key things. You can see here, as of this update, NFM, Northern Nigerian Flour Mill, is doing 73% in my portfolio. USCN has delivered 101% gain. YPZ, 90% gain. NACO, 150. NASCON, 350. Corn oil, 125. Eternal oil, 195. etc. These are some of the past winning stock in the market. This type of stock doesn't come every week or month because it takes months, multiple months or years for the setup to complete. But when you find them in the market, they can deliver life-changing profits and make you a lot of money. That's explosive stock. Now, one of the secrets of this explosive stock is sector events. So I shared 5 key indicators, 5 key metrics that will tell you the best sector to always buy your stock. So if you use the 5 key metrics here, you will find the hottest sector. Now, in that hottest sector, we're now looking for dividend growth stock, meaning we're looking for stocks that would pay dividend and also deliver capital appreciation. Now, imagine that you are doing this every year. So that's why I call it an annual exercise. You're rotating dividend from one company to another, meaning the way you bought into Mansard, you bought into GTCO and bought into Custodian. Now, after you have made money, collected your dividend, you now move into another dividend stock for 2024, and then you hold them for the 2025. So it's an annual event. It's not something you do every year. But then you have to be sure that you are buying into the best company and the best sector. So which is the hottest sector for your next dividend growth stock in Nigerian stock market? At the time I'm recording this video. Now, this question is not a one-time, it doesn't come with a one-time answer. It depends on events. If you had asked me last year, I would have told you there are multiple sectors. Oil was hot last year, banking sector was hot last year. So this year, based on events that have been unfolding and financials released so far, the finance sector is the top destination for your dividend growth stock based on the financials released so far. The finance sector is where you can find a dividend growth stock. If I show you the financial results of some finance stock so far, you would see it's amazing. It's amazing. All the finance stocks that have released results so far, Q1 2024, it's amazing how this is already evident. And there is one factor that is responsible for this growth. If you are in my community, I'm sure you should know that factor already. I've already shared that with you. And I already told you why finance sector is currently hot in the market based on the 5 metrics that I share. So knowing that metrics would help you know which sector is currently hot. Right now, finance sector is hot. Now remember, this video was produced in Q2 2024. Now, I don't know when you'll be watching this video, so, but your own job is to find the current sector that is hot within that period, within that moment you're watching this video, because a time might come, finance sector might no longer be hot again. But I am using this as a guide. I'm using this for educational purpose. So right now, finance sector is hot. So if I'm going to be looking for a dividend growth stock for 2024, I should be channeling my energy to finance sector. So finance sector is the top destination for your. That means if you're looking for a stock that will pay you both dividend and also generate guaranteed return via capital appreciation, then finance sector is where you should. Now, I didn't pick finance sector as random. I didn't just come up and say, oh, finance. No, I looked at the 5 metrics that I used to pick stock. I looked at the 5 metrics that I used to pick stocks, and based on that matrix, I was able to pick the finance sector for my next stock. So that is what you should learn. Then my top dividend stocks to buy. My top dividend stocks to buy. Now, like I said before, there are information that are only exclusive to members of my community. So I'm sure you have watched the video and then you have learned a lot from what I've shared with you. Now, from this particular video, I am actually dropping 4 good dividend stocks in the market. Now, out of the 4 good dividend stocks in the market, there is only one that is good for capital appreciation. There is only one that I like for capital appreciation, and that is the one I'm going to drop in my community shortly. So each of these recommendations have been carefully selected based on their revenue, net income, EPS in the last 10 years, with history of consistent payouts. One of these 4 looks like a growth peak. One of these 4 looks like a growth peak. When I say growth peak, means it's a growth stock. One of these 4 looks like a growth peak, and then you can buy them for capital appreciation. So here, I have carefully picked 4 good stocks that have generated good returns, that have history of consistent growth in sales, net profit, and EPS in the last 10 years. 10 years. That means I'm looking for dividend aristocrats. And then these guys have history of consistent payouts. That means in the last 10 years, they've been paying dividends consistently. And one of them looks like a growth stock. Now, when I say it looks like a growth stock, it means it's most likely going to deliver capital appreciation from now till next year. That's what it means. Now, while I am still looking at this stock, it's still not fully confirmed that it will pass my checklist. That's why in August is always the best time for me to pick dividend growth stock, August. And my reasons would only be shared with members of my community. It's a secret, and only members of my community actually have access to that secret. Now, it's a time bound. It's not a webinar I host. Why did I choose August? It's because August is strategic in the year. And there are things I'm watching out for, which means by August, everything would have played out clearly. So it will be too early for me to call it a full dividend growth stock. But then it's already ticking as a dividend growth stock. But I feel that by August, this company would be fully matured to probably qualify as a growth stock or not. But then, does it mean I can buy it now? Yes, why not? If the share price is still low, if I can start accumulating now at a low price, then it is a perfect time for me to start buying. But then when I'm buying, I'm also being careful, because once all the factors have not fully played out, then I have to be doing one leg in, one leg out. That means if I'm accumulating, I'll be accumulating in bits, in bit, in bit. But then once August is here and I confirm that this is a full dividend growth stock, then we're going big. And I'm going to mention that again in our Cash Out from Nigerian Stock 2024 webinar. So one of the dividend stocks you can watch right now is Access Bank. Access Bank is not a dividend growth stock, but it's a dividend stock you can take advantage of. It's a dividend stock you can buy and hold. Access Bank has delivered an average 10-year revenue and EPS growth of 27.4% and 26.6%, with yield, that's dividend yield, printing at 12.5%. This is not bad. So imagine dividend yield printing at 12.5%. So this is not bad for dividend peak, knowing fully well that in last couple of months, we've not been able to find the dividend stocks in the market. So this is example of a dividend stock you can buy. Access Bank had history. It says Access Bank ticks all my checkbox for a good dividend stock. So I need to just give you this one. Now, the rest of my dividend stocks will be shared with my community. That's why you have to join my community, because by joining my community, you're going to learn. One thing about my community, which I can always stand and tell anytime, anywhere, is knowledge. You're not coming to the community to make money. You're coming to the community to learn. It is the process of learning that you will make money. It's the process of learning that you will make the money. That's the way it works. So you don't just buy random stocks because your broker says you should buy, or you went online. No, you are coming to learn why you should buy every stock that you buy. Meaning, when I say buy stock A, there must be a reason. So I'm not just dropping recommendation randomly. I am telling you why it's a buy. So Access Bank right here, it's a very good dividend stock. Access Bank is not a dividend growth stock. I have not said Access Bank is a dividend growth stock. It's a good dividend stock. So for someone that is looking for dividend stock to buy, maybe you want to start somewhere and then grow your portfolio from now, look into Access Bank as one stock. Now, this also assumes that you want to hold Access Bank for a long time, meaning as they pay you dividends, you continually reinvest over time to enjoy capital appreciation. So Access Bank is an example of high dividend stock, because the dividend yield on CAR right now is at 12.5%, and it could even increase. Why? Because as I share this video, Access Bank is actually dropping. Access Bank share price is dropping. And one of the advantage of a share price dip is that for you as a dividend investor, you will most likely be able to pick up at a lower price, hence provide higher yield. Look at Access Bank stock. Access Bank stock is down by 31% this month. In April, you can see here 31%. And in March, it delivered 27%. So you can see this huge candle here. This is not a good sign. This is a bearish sign. So that means we could see further dip, and then dividend yield can rise from 12% to reach 13% or even 15%. Now, imagine collecting 15% on a stock like Access Bank. That is good. So hold on, you are going to get more yield. So if Access Bank rises from dividend yield rises from 12.5% to 13%, 15% or 16%, that's good. That's good. That's one, and that's a big advantage for anybody. This opportunity comes once in 5 years. Once in 5 years. There were times any bank dividend yield was almost around 20% when it crashed to 8 naira, 18 naira, 8 naira, yes, 8 naira, I mean, 8 to 10 naira. So take advantage of the crash in share price to build your dividend portfolio. The best time to build dividend portfolio is when stocks are crashing. Why? Because you'll be able to get attractive yield in the market. And because you're buying them for cash flow, then you will be able to build wealth in the market. So I hope this video has shared a lot. I hope this video has helped you, has opened your eyes to the best way to be able to make money from high yielding dividend stock. If this is the first time you're watching this channel, kindly turn on the notification bell, hit the subscribe button, so that when I release timely video like this, you'll be among to get notified or to get access to my recommendations.